Okay, so first of all, it was nice to take a little break and network and get a chance to talk with each other. A lot of ideas, a lot of connections. That's why we do this. Preeti and I do these events in order to be able to help people connect, share ideas, meet good people. It's so hard to meet people that are, have signal and not noise in life in terms of them driving value, creating value for others, and adding to the ecosystem of innovation and helping to create startups, helping to create growth and exits. It's really not that easy. As Ben said, he's looked at 10,000 startups and picked 6. I advised like 300 startups last 2.5 years. Somebody asked me if I would write checks, and I would said I would only write checks into 3 of them. And so these are 300 out of the incubators, which is like 20,000 to start with. Actually, maybe 5 out of 20,000. So pretty close numbers. And it's so hard. And so I think it's good to take a break. And again, after we finish the session with Sunmeet, please feel free to connect with himself, myself, everybody else, because the whole purpose of these events is to cross-pollinate connection and cross-pollinate value for each other. That's why we do this. So just a quick background, I'm DJ Deep. That's my social handle. My name is actually Deep Sahni. I've been an executive coach for years, and now I advise startups and also investors. Preeti and I have been hosting events for about a year. We do this every month. My focus is to be able to connect the right people with the right people. That's what I'm really focused on, to be able to extract patterns and insights from the speakers that we interview with, and to give a chance for good people to meet good people. Preeti and I also host venture dinners. If you haven't been to one of ours and you're an investor, please let us know. We host them. We connect Indian and French and American and Russian and Israeli and like Persian, and get everybody out of their buckets and get them to come meet over good French or Italian food, because I went to school in France. So, and those dinners tend to be 4 hours long and no one leaves. And the restaurant gets shut down, and people tell us that they actually got a chance to meet somebody and do deals with them. And that's what our focus is. So just to give you a little background on me, the rest of the whole talk's gonna be about Sunmeet, not about myself. But I just wanted to give a quick intro about why we're doing these events, Preeti and myself. So first of all, I'd like to invite Sunmeet Jolly to the stage. Sunmeet has been ranked as the top investor in Silicon Valley in terms of as an angel investor. And now he is launching his fund, and he's going to provide us today with a number of insights as to what he sees is happening in the investment climate. And Sunmeet, I'll let you finish your introduction.
Hi, thank you, Deep. Hello, everybody. My name is Sunmeet Jolly. I've been in Silicon Valley for 25 years, and initially an operator for 11 years, and then a real estate investor and an angel investor for 9 years since 2016. Also founded a social media startup, have some patents in that area, kept it bootstrapped, but then switched to launching my first fund after attending VC Lab. So we went to VC Lab, we graduated in November 2023 in the cohort 11, and then formed the fund last year. So I'm on my fund 1. We've already raised $4 million for the fund, and we are deploying as we raise money. So we're deploying from our first capital call. We already have 9 portfolio companies in the fund. I've done 44 angel investments for 9 years as an angel. That was kind of fund 0, which led to VC Lab, and then now it's fund 1. It's a formal VC fund now, where we have LPs. We already have 41 LPs and me as a GP in the fund. And we are still upsizing this fund, for another 8 months, or if we hit our fundraise goal of $10 million. We are at 4 right now, signed, and we have about 2 or 3 million more of soft and hard commitments, but we are still raising and deploying.
Great. Can you talk about, as you've had experience both as an operator and you've had experience as an angel investor, and now today you've raised your fund, how does your investment thesis change today that you're managing a fund versus what it was like as an angel investor?
As an angel, the access to deal flow was limited because the check sizes were limited. I did $250,000 of my own money in 44 startups. So I was adding $10,000, $15,000, $20,000 checks, $5,000 checks. So whatever came my way, who would accept those check sizes, was the only pool available for me to find those deals. But we have been able to achieve 38% IRR and $5 billion exits despite those limitations. But as a VC, I have much more access to deal flow because now I can write $200,000 checks. I can go up to $1 million per startup, 10% of my fund size raised. So which gets us into Series A, which gets us into hot deals. If there's a hot deal going on, we have done 2 deals with Axel Partners, where they are the leads, and we have just added a few 100,000 there and told the founder that we'll help you. I have a 25,000 LinkedIn network, and we're going to help you find more customers, more investors, and we'll be helpful. Just get us into the cap table. So being a smaller fund has its advantages because you can get into big rounds, very hot rounds, and with a decent enough check size based on your size of the fund. And so that's what has changed. Access to a large amount of deal flow and be able to get into some of the hot rounds where a $10,000, $25,000 check cannot get in as an angel, but a $200,000 check can get in. And constructing a portfolio of about 40 startups over 4 years in Fund 1.
So
That's the goal.
It sounds like there's like a multi-sided opportunity here. On one side, you've got you're raising a $10 million fund and you're $4 million committed so far. So you still got space for people whose checkbooks are burning a hole in their pockets. Anybody here? So just doing a little plug for Sunmeet. You can contact me at deep@sunmeetjolly.fund.com. So like I just give me some Indian dessert. I'm fine with that. No, but it sounds like there's an opportunity, one, to invest in this fund. Number two, it sounds like that you're partnering with larger funds and you're offering this advantage that you can sit down and be more involved in operations level with the founder to help them sort of scale, sort of do sales, do marketing. What is your secret sauce that you can offer that other early stage investors don't have?
So when a founder sees my background, they see that, okay, 11 years, I was a corporate salesperson. 6 out of Fortune 500 were my customers. I've done $200 million of sales myself. Then I have patents granted in the United States and trademarks granted for a social networking app. Then I've been an angel for 9 years in 44 startups, and I've had multi-billion-dollar exits. And I have this whole network of VCs and angels that co-invest along with me. So they see that there'll be some value in even a conversation with me for an hour, whether it's go-to-market strategy, or whether it's should I patent this or not, or just give me a reference to a good lawyer who can do a trademark or patenting for me. So these services come free to our founders because they see some value in that. And then I'm from VC Lab. There are 150 active funds which share deal flow amongst each other. Almost in everywhere I have invested in a startup, I have gotten another angel or my LP or another fund from VC Lab to add more money. So that's a value add for the founder. If I'm putting, say, 100, 200K and I get them 300 or $500,000 more from 5 other funds from VC Lab, or my own LPs also co-invest with me. So they see not just that you have a small fund and all, they see that there is a value, and I'm easily accessible. They can do a Zoom call with me on GTM strategy or a IP strategy, right? So it's the extras that we bring to the table that gets us into some of the hottest deals out there. If we request it, if we know about it, yeah. And in my current fund, I have billionaire David Cheriton's Casper.ai. He's the gentleman who wrote first check to Google, and then he built Arista Networks. His $15 billion net worth. He keeps writing his own money into the company and buying common stocks. But when I convinced the co-founder that I'll be helpful, he got me in. So we are on the cap table at seed investment as a seed investor in a billionaire-founded company, right? And then we have a couple of deals with our Axel Partners and many other deals. If I just have to hear about a good deal and I can really access the founder and tell him, we'll be helpful, get us in. I'm on my fund 1, I'm just like an entrepreneur like yourself. And they're ready to help, they've seen early days too.
Yeah, we want to make sure we get the mics for the recording.
Oh, sorry.
Yeah, so that people can hear us. Okay, great. So it sounds like you're able to be a partner to the founders in their journey, acting as a sounding board and also providing them help with where's the North Star, where they should focus as they grow. Do you have a couple of startups right now that you're excited about that you can share with the audience in terms of ones that you've invested in that you're like, I can see these startups doing extremely well?
Yeah, one more thing I'd like to add to the previous one. We also help with customer referrals. A lot of my LPs are CXOs in big companies, like CIO of Harley-Davidson Motors is a LP in my fund. CIO of Citizens Bank is a LP in my fund. These startups get direct pilots or warm intro. They are already in the fund. So it's not just a warm intro, it's much beyond that. You're actually starting a customer relationship because you are introducing them and they're already invested in a fund which is invested in the startup. So we've also done that for some of our startups. So coming back to your next question, what was it?
About which startups that have you invested in that you're excited about that you could share?
So in the current,
with the
in the current
audience?
fund, we have 9 right now, out of which I would say let's just talk about 2 or 3. So one is of course Casper.ai. They are using AI to literally save lives in senior care facilities and outside of hospital care, home care, using ambient monitoring of 20 health conditions without variables, without cameras, using radar and Wi-Fi. Stanford PhDs are founders, and including David Sheridan, who's a $15 billion net worth founder of Arista Networks and first check writer to Google. So that's the tech team, and then now they are bringing on healthcare experts like $5 billion Benecon Group's Samuel Lombardo. He's now come as a board member and a chief revenue officer. So the team is like the best you can think of from experience perspective. Capital is not an issue. They have their own capital. They can get any capital they want. The addressable market is so huge. Healthcare is 20% of US GDP. And
Wow.
AI is going to disrupt so many parts of healthcare. Wherever we have older software, where we have people processes, 24/7, 365 care needed, and people are not available, you could do a lot with AI. So that's one exciting startup. And then I have 2 fintechs.
Or
One
where
is
you do, sorry to interrupt you, where you don't even have processes in the healthcare industry, or you have pen and paper. So
a lot of places you
there's
can
a lot
also
of gaps
change that.
because of that as well. Yeah.
Another great startup is VC Lab's parent company, Desile Group. So when I was in the VC lab, I asked Adeo, Resi, and Mike, I said, can I invest in this? They said, yeah, a round will open up and we'll let you know. So the first investment I made from the fund was in Desile Group, which owns the VC Lab accelerator, which is number 1 accelerator in the world. 50% of new VC fund formation is happening all around the world through VC Lab right now. So they are like the Y Combinator of the VC world, but there is no number 2 or 3 or 4. Literally, you can't find 50% market for new VC creation is with VC Lab. So that they run the accelerator, then they run the back office management for VC fund, which is a paying customer. So I'm a paying customer. My VC fund is, I have accountants, lawyers, treasury experts, all banking experts. So the entire fund administration is a paid service where I'm a customer, and there are 150 other funds which are paying customers for that. So it's a revenue generating business, the second part. And then they have the fund of funds and an LP institute. So they are kind of disrupting the entire world's VC ecosystem. Currently, 70% of VC money in the world, LP money, goes to maybe a few firms in Menlo Park, but the whole world needs VCs. So opening these $10 million, $15 million, $20 million micro VC funds all over the world is being done by VC Lab. So I'm very excited about that investment. So we just got Tim Draper, Jason Calacanis, and many other big boys of Silicon Valley and friends of Elon Musk invested in a preferred equity round in VC Lab, in Desile Group. And so they raised $14 million, and we invested before. So we got a bump up in our share price too.
So really a range of different types of startups you see.
One more startup I want to talk about.
Okay, go ahead.
That's another fintech. This is Posh.ai, Posh.ai. Started in a dorm room by MIT guys, Matt and Karan. They're the founders. So it's like a classic dorm room story. It was an internal research project within MIT. And they started consulting with small banks and credit unions on modernizing their customer service. So there are about 10,000 small banks and credit unions across the United States alone. The Fremont Bank, the Star One Credit Union, the Howard Credit Union. These guys do not have the budgets and the time like Citibank and Bank of America to train their own AI. So have few hundred people, data analysts, train it for years to build AI. So what they do is they simply invested in Posh. So the customers themselves invested directly through American Bankers Association. as well as through Canopy Ventures and Circle, which is a consortium of credit unions investing in the credit union technology modernization. So the customers themselves lend money as well as invested in them, just like Desile Group, and now they've raised $38 million. They have 15 million ARR with 100 small banks and credit unions, and they have just captured 1% of US market. It's an AI which is trained in handling banking and credit union. And these both boys are Forbes 30 under 30, young boys, never worked for anybody else. Started in the dorm room, worked only for themselves. So, that's very exciting startup for us. We are a Series A investor there. They never had any seed round or pre-seed round or accelerator. Their first round was Series A, and then there was a smaller round, Series A2, just to top it off, and we got in there because of a relationship.
So I want to move the conversation for a second to what everybody's talking about these days, which is AI. So you have AI first startups, which are companies that have been built around AI. Many of the founders graduating out of Techstars or Y Combinator or Payer these days are very young, 18, 19, 20 years old. They're building AI native apps and software to begin with. And then you've got companies that are finished 2 to 5 years ago that are at Series A, maybe companies that have graduated from these incubators 3 to 10 years ago that are at Series B, C. And they're different stages and their growth rates are different. And earlier I was just at Tau Ventures and George Lee was speaking. He's a chief information officer from Goldman Sachs. And he was talking about what predicaments you see in terms of how companies grow. And he said, everybody's measuring ARR, but he said now there's ERR, experimental, reoccurring revenue, because companies are trying different ways of trying to create revenue. Do you have some insights as to how you determine whether an AI company is heading for growth or heading for implosion? Do you have some insights to share with the audience about how you evaluate the AI companies?
The way we do it is we talk to everybody, but we only act when we are confident that they found product market fit, which is only visible after they have a bunch of customers. So the lowest revenue company that I've invested from the fund is 100K ARR with 6 customers. The highest is, of course, 100 customers, 15 million ARR. And everybody else is in between. So there's a 3 million ARR, there's a 2.4 million ARR, there's a 500,000 ARR. But I don't write checks unless I see customer validation. Because as I said, 44 investments as an angel. I've also burnt my fingers in dreams and only looking at the team and their ambition and not looking at whether the customer really wants it. And those are the ones which fail. Although I've had less failure, touch wood, 40 out of 44 investments, I got $5 billion exits. I got 8 exits total, bringing 3x back into the bank. Whole thing is running at 38% IRR, 4.4x MOIC. 24 are still active, in which there are a few rocket ships, which are just growing. And then others have survived 9 years. So I hope that something will come out of the rest too. That can end up in a 6 to 10x, which will be a great fund zero. But I've learned from the ones which died and dissected why they died. And we realized that, of course, founders sometimes give up even at a later stage, but those are very rare. A founder which can sell its stuff and see his customer happy with his product, and he's making 70, 80% gross margin, and there's a huge addressable market for it. It'll be crazy for them to give up after the initial years of slogging that they've done, because it gets easier later on, right? Your 100th customer is easier than your first customer. Your 200th customer would be easier. And at some point, you have a break even in profitability. Why would a founder give up at that point? Only the ones guys where there's a fundamental problem. Either there's not enough gross margin. There are high capex businesses. I invested in a very high capex business with low gross margin, and they folded at Series C. But it was my mistake. Why did I do that? I shouldn't have invested in those. There was another one. It was Stanford rocket scientists. They were launching a satellite in the middle Earth orbit, which would connect with all the satellites in the world and 3 ground stations to give 24/7 coverage. But they would not see revenue until that satellite was successfully launched and operational. So we kept pouring money into that. They did the first SpaceX launch on a SpaceX rocket. They never connected the ground station with the first satellite. So that went to zero because no investor put any more money.
Mm.
There again, there was no revenue.
Mm.
Everything was on the dream and the team.
Mm.
Those are very risky.
So
You can do a proportion of portfolio if your other stuff is doing very well, and some exotic stuff, but I wouldn't do it consciously. When I have fiduciary duty of managing other people's money,
okay.
avoid those and go to those which are, generating revenue and great gross margin, growth rate. They found a GTM strategy is working for us. They've gotten into the what you call they're having drinks after drinks, and it's getting easier for them. That's easier than.
So exclusive Dream Team is out, and customer revenue is in right now for you guys as a North Star. Where do you see taking the fund right now as you're looking forward over the next 1 to 3 to 5 years as you grow your fund, as you raise your subsequent fund at 50 and 100 million? Where do you see taking the fund? Where do you see going?
So the firm and the fund. So there's firm, Jolly.VC LLC, and then this is fund one within the firm. So fund one will continue to raise till March and next year. So 8 more months of fundraising left for us. Or if we hit the 99th LP. So we are 41 LPs right now. If we hit the 99, then we cannot. After SEC regulation doesn't allow going beyond. So fund one will go until we can, hit one of these limits. And fund two, I cannot start unless I have deployed 70% of fund one, which means in 2027, I have the third capital call. Our capital calls are structured 25% each year. So right now, when we sign an LP, we take 25%. And then second capital call for everybody will be once the fund closes next March, and then next March and this March. So 70% of the fund gets available to me to deploy only in 2027. And assuming once I've deployed 70%, I'm allowed by my LPA to start a second fund. So and we don't know the size of the second fund. Everything depends upon how this one performs and what relationships we are able to build during this period.
In the interest of time, because we started late, and 2 last questions. One, how can people reach you in terms of founders or LPs that are interested in working with you, or other funds that want to partner with you? How can they reach you, Sunmeet?
Yeah, first I've kept a very easy name, Jolly.VC. Okay, so if you do Jolly.VC or Jolly.VC, you're gonna find me somewhere in LinkedIn. And LinkedIn, I'm trying to catch up with my LinkedIn. We do have backlog there, but eventually we will. So I do direct message responses on LinkedIn. My email is sunmeet@jolly.vc. So Sunmeet is sun, the sun, and meet. Sunmeet, one word. That's my first name too, @jolly.vc. And you can catch me. I do a lot of Zoom calls, several a day. We do in-person meetings, and I also hang out with Preeti and all the major events, Ryan's events or Rob's events. So you can, or we can also do in-person meeting, in-person presentation. If you're an LP, of course, there's an LP presentation. It's a separate meeting. If you're a founder, want to pitch, then of course we do seed and Series A, AI, SaaS, IoT. So founders within those thesis can send a PDF deck, and then I give you my link to my Calendly. You can set up a Zoom call. I do tens of founder meetings every week. So we want to see and meet everybody because, founder who's doing something today might be doing something else tomorrow, or maybe what they're doing might become great. Who knows?
You never know.
Yeah. So we want to be friendly with everybody out there in the ecosystem.
So let's leave some time for questions. Do we have any Jolly questions, or no? Anybody? Go ahead.
Yeah, I'd love to hear about the investment thesis.
Well, investment thesis, again, seed and Series A, AI, SaaS, and IoT. Why I say IoT is because computer vision side of AI has hardware as well. I do some metaverse stuff as well. I'm an Oculus user at least once or twice a week, and I feel that, and we have invested in some companies which are doing very well in that space. So I don't want to say no to that part as well. I often do smaller hardware, medical devices. So IoT, I'm open to. I'm an electronics engineer myself. I don't get scared by hardware. I get scared by big hardware that requires a bulky shipping and tariffs and all the problems that come with it. But smaller hardware, along with software as an IP, is fine with me. So that's why IoT is also included in that.
So can you just say your name and your firms because people are listening online so that at least they know who you are?
Yeah, your name. Yeah, and my name is Gino Greco.
Gino
I'm the
Greco.
founder of GP Greco.
Okay.
The single point of contact for the private markets and
Okay.
the Morgan Stanley affiliate.
Great.
And I've heard all positives about VC Lab and Desile Group and the Start Fund. It seems to be a very fruitful experience.
Yeah, Start Fund is very interesting innovation by Adeo, and he is going to be probably replacing the SPV market with that. So before you become a VC, the other option which people have, let's say a bunch of people working in Google, a startup comes to them, they say, let's pool in money and invest in this startup. They would go to AngelList and do a special purpose vehicle and invest in that, right? None of them wants to become a VC. That doesn't add to your VC career as a track record. But what he's doing with Start Fund is, and then on the other side, you have a traditional fund like mine, where you need a track record, you need a fund size. It's a blind pool fund that I'm starting. So people who are investing in me are investing because of my track record first, and then they get to see some stuff we have invested. But 75% of the investments for the fund will be in next 3 years after you're logged into an LPA. So practically you're betting on me, right? But that counts as a track record as fund one to get to the institutional money, which starts at, say, fund two or later. But SPVs don't count as a track record. So what Adeo is doing is a beautiful innovation. It says, I'll give you a start fund, which you can start in one day. You don't need the SPV structure and all. And that'll count as your fund one for a VC career if you want to build a VC career. The mandate of VC Lab is to build more VC funds all over the world. So he wants to make it easy for people to start their fund one. Still, the fund formation rate in VC Lab is, it's like 10% acceptance, 2% pass rate, 1% fund formation rate. Is that difficult? And I've been through that, so I know that. First close is very difficult. There's a cliff of 1 million to raise from other people's money in first close. So he wants to make it easy. He says, start smaller funds under our umbrella, and that'll count as your fund one. And if you hit something big, then you'll have a fund two and fund three. And then you can go with the regular money, tap into the regular capital available from LPs.
Great. We have 2 more questions. Anybody else? Go ahead. Yeah.
How does it compare VC Lab with, say, for example, the Kaufman Fellows or any other accelerator program?
VC Lab is doing it on a much larger scale. I mean, I've not done Kaufman Fellows. I've done probably the free program, not the real one, which they charge about $75,000 or something. I don't think they have a huge ecosystem where they're connecting you with LPs. I can't compare because I've not done that. Although Adeo has good things to say about that program. That's the only program he says which has some benefit. There are a lot of pay-to-play programs out there. Clearwater Capital and some other guys are in this business. But again, this is very entrepreneurial. Just like starting a fund one is just like a startup. There's a 1% pass rate of fund formation even after VC Lab, right? So you have to, and raising capital is sales job. So although I'm a VC, majority of my times gets spent in pitching, Zoom calls and meetings and LPs. So it's a sales job. You have to be comfortable doing sales. When I look at my founders, I'm always looking at who's the sales guy in this, who can raise money forever and talk to customers forever. One guy has to do that. If it's both all techies, then it's a kind of a very no for me. You'll not be able to build a revenue-oriented company that gets a Series A, B, C, D, and IPO without revenue. Wall Street doesn't care what your tech is. They care what the numbers are. So big money only comes when you show numbers, and sales has to be a part of the DNA and someone in the team, founding team. Doing a fund is also like that. You have to be a salesperson. Raising a fund is 100% sales job.
Okay, we have time for one more question so we can finish up and everybody can have networking afterwards. And one last question. Okay, well, listen, thank you guys for coming today. Thanks to Preeti for hosting us here. Thanks for Ryan to initiating this great event and spearheading this event with wonderful speakers. Thanks to Ben for being here. Thanks to Sunmeet. And we'll leave it closed now, and you folks can network with each other. Thank you.
Thank you.